What is going on, my friends, and welcome back to the Crypto Catch Up. Now, look, today what I want to do is talk to you as to why I am going to be starting to pick up cryptos. Again, I am going to start picking up my dollar cost average because I do think we're entering into a zone in which overall I would consider a buy zone. Now, today we're going to take a look at a couple metrics, ones that I think work really well when determining my short to midterm thesis. And of course, I hope you guys do take some value from it. Now, again, this is a new channel, so if you do find this video valuable, please do let me know by subscribing to the channel here. But with that said, let's get into it. Now, starting off the day, let's just take a quick look at crypto bubbles just to get a feel for the context of the market. Now, hourlies, dailies, weeklies, monthlies. I mean, we're looking pretty ugly across the rest of them. But what I want to focus on today is the weekly. Now, if we do go out to the weekly, obviously there are some ones that are doing well, right? Jasmine holding up well, Aave holding up well, Bohm or Book of Meme holding up well, Jupiter holding up well, Casper holding up well, and that's realistically about it. Everything else outside the top 10 or in the top 10, top 15 is not looking that good. Obviously, Pepe taking some losses, Whiff taking big losses, ICP, Floki, and many more. So overall, seemingly, leaning towards more of a negative sentiment currently. Now, speaking of sentiment, what we can see here over on CoinGlass is that the fear and greed index is currently sitting at a 52, which is a point of neutrality. Now, one of the cool things about CoinGlass is that you can actually see how long, how many days we spent in certain different zones. And over the last week, actually, we were seeing this thing in greed, right? You can see over the last 7 days, we spent 6 days in greed and now 1 day in neutrality, meaning that we are starting to shift from a point of greed over to neutral. And that is also shown here on the chart down below, in which you can see that although we recovered, right, we recovered up a little bit, we are starting to waver. We are starting to see this fear and greed index pulling back towards the downside. Now, from a more macro percentage or perspective, what you can see here is that we have seen a decent balance over the last month, but we are starting to lean back towards the direction of fear or neutrality, in which we spent 50% of the month there. So overall, general sentiment right now is that we are seeing red. We obviously can see that just from the price of Bitcoin pulling back, obviously Ethereum pulling back, total market cap itself pulling back, and overall the general feel of the market in terms of greed and fear is down as well. Now, generally speaking, what I could say, realistically, I could just stop it there, which I'm not going to, but I could stop it there and just say, in these moments in which we're entering into a point of neutrality, entering into a point of fear, that's generally and historically the best time to be buying. But what I want to do is I want to give you a little bit more context, and I want to dive a little bit deeper into the technicals or just the fundamental analysis of why we are seeing this being a good historical time to be entering into trades here. Now, to lay the foundation a bit, what I need you to understand is that I'm saying right now that I am buying, but I'm not buying a lot. I have some dollar cost averages going out, but I'm keeping a lot of cash still on the side. And the reason being is because although this is a good time to start those dollar cost averages, right? Start slowly accumulating, it's not the best time. Typically, the best time is whenever everything is fearful, everything is terrible, the market's down 30-40%, and then obviously you're at a spot in which you can start to add to those bags, and realistically, the likelihood of seeing growth is very high. But the reason that I wanted to start this accumulation now is because what you need to understand is that in a bull market, getting those massive moments of fear is very difficult. You don't see many. Actually, if we just go back out to the, let's go to the greed and fear index, and let's go to the last year, we've only spent 21 days in fear over the last 365 days, guys. Out of that, 114 days have been neutral, 215 days have been in greed. And so realistically, having an understanding that we are still in a bull market, at least I believe we're still in a bull market, and knowing that getting those massive macro moments of fear, it's not good enough, in my opinion, if you do want dollar cost averages, to be waiting for those massive moments of fear, because again, we spent less than 10% of the last year in a moment of fear. And so again, when we enter into a point of neutrality, historically, at least over the last year, that has been a much better time to be entering into these average costs or just slowly buying in. Now, another thing that we can look at to kind of get a feel for this is this RSI indicator. Now, again, this is an RSI heat map used over here on CoinGlass. And what you can see is kind of the general state of the market. Okay. What this is going to tell you is the momentum. I'm trying to make this as easy as possible. Is the overall momentum for Bitcoin, Ethereum, and all of these different cryptos listed. Are we in a point of bullish momentum or bearish momentum? Are things more likely to reverse to the upside soon, or are they more likely to reverse to the downside soon? And clearly, knowing that we're in a bit of a pullback, off the top of your head, you should know that things are more likely to reverse upward soon, but this kind of gives you a visual. What you can see here is that the average RSI currently for the market is 36.20, which is weak. Historically, the point of neutrality is a 50. We are at a 36.20 averaged out across the top 100 cryptos in the market right now, meaning that on average, the cryptos that we are seeing right now are looking either weak or oversold in the current momentum that they have. And considering we're going down, it means the bearish momentum that we're seeing at this given point is weakening, generally meaning that we could reverse upwards soon. Now, again, I'm not trying to overcomplicate things, but I hope you just understand that what we're doing right now is weakening. And as we're falling, the likelihood of us reversing upwards soon becomes higher and higher and higher. Now, as we do, of course, see the average RSI continue lower, we could even end up in a point in which things are oversold, meaning things that overextended to the downside, things are getting extremely weak, and then the likelihood of growth is extremely high. And so we're not there yet, which again is the reason why I'm not going full investment in with all the cash I have. But considering that things are weakening, this bearish move is weakening, it seems as if we are in a spot in which we definitely could see this thing turn around at some given point. It probably won't be right now. Could be another few weeks, could be another month or two as we exit out of summertime, but it does seem as if things are weakening. Now, the last thing that I want to show to you guys, and again, remember guys, every week we're going to go through these metrics. I might post 3, 4, 5 videos a week here on this second channel, and we're going to talk about all of these things and keep you updated. So if you do enjoy these videos, if you do like this fundamental analysis, if you do like these overall market views, make sure that you do subscribe to the channel and like this video. It would absolutely help out a ton. But look, the last thing that I want to go over here is the liquidation heat map and show you why I have even more conviction that we could see Bitcoin start to rally, which of course would generally pull the rest of the market with it. What we can see here is that the current point of max pain within $30,000 of the current point of Bitcoin, let's call it the last, even 20,000 to kind of specify it down a little bit, is to the upside. Currently, the most liquidations that the market would see would be around $70,000 to $72,000. And what I've come to realize being in this market for the last 3 to 4 years is that the market will typically move in the direction of the most liquidations. Why? Because it's the easiest way for the lizard people, as I call them, to take as much of your crypto as possible. And so knowing that the majority of the liquidations are to the upside, the likelihood of growth and a push in that direction is very, very high. And so, of course, it may not happen now, but that should be the general trend that we go into over the next 6 to 8 months, at least in my opinion, then giving me even more conviction in the dollar cost averaging that I am doing right now. And so because of all of those things combined, I do think now is a good time to start adding into those bags, picking up some maybe Bitcoin, your top 10s, top 15s, maybe even venturing into your meme coins if you are seeing things like, WIF down 17, 18% on the 24-hour charts. And so because of that, again, I wanted to just tell you guys my overall general thesis over the next couple weeks, couple months, what I'm doing right now and much more. So remember, guys, if you did enjoy these videos and you like this new style that I'm bringing here to the second channel, make sure that you do let me know once again by smashing that like button and subscribing to the channel if you are new. And I can't wait to see you all next time. Peace out, everybody.